Hello, everyone. Welcome to Wall Street from Main Street podcast. My name is Mo Dawood, and today's guest is a returning guest. We haven't had him on for a while, and Jeff Nielson. He is the co-founder and managing editor for Bullion Bulls Canada. Jeff, welcome back. Great to have you back on.
Hi, Mo. It's nice to be back again.
Okay, Jeff, I want to talk about the economy at the beginning of this podcast. Now, you recently wrote an interesting article regarding the next upcoming crash and the possible ammunition that the Federal Reserve may or may not have once that crash happens. Now, there's a lot of people out there that think that the Federal Reserve have plenty of ammo in the gun to try to manipulate the market and try to keep it propped up. I interviewed John Rubino last week, and he thinks that the Federal Reserve could do negative interest rate. So that's one possibility that the Fed haven't done. So what do you think? What tools do the Fed have if we suffer another financial crisis, if any?
Well, I think the important thing, Mo, is to step back a little bit and take a bit of a big picture look here and just think back to where we were, say, in 2007 or even into 2008 when, excuse me, when they first began talking about all this monetary insanity. Excuse me, sorry. And, basically what was involved was doing all sorts of ultra extreme things that had never been done before because no central bank had either been desperate enough or crazy enough to ever want to do it. And so that's what we've been doing for the last 7 years. And all of a sudden, because you've been doing something totally insane for 7 years, this is considered to be normal. Well, of course, if insanity is normal, then I guess you can have plenty of ammunition for the Federal Reserve. They'll just do even more of these crazy things. I mean, negative interest rates is just prima facie crime. I mean, it's stealing from borrowers. It should be illegal. There's no possible market justification to ever have negative interest rates. There's no market justification for ever having 0% rates. 0% rates are fraudulent. It's a fraudulent transaction. If you tried to do a so-called 0% loan in your own personal affairs, the IRS would be on your back in a minute. They'd call it a sham transaction, and they would nullify it. So, I mean, what we're talking about here is open crime. 0%, quote-unquote, 0% loans, giving away money for free, and now negative interest rates, borrowers stealing from lenders. I mean, this is just financial crime. So, if anything goes, well, then sure, the Federal Reserve's got plenty of ammunition. It'll just do more crazy illegal things. But I mean, there's no sense to any of this. There's certainly no long-term gain other than for the bankers who get all this easy money. There's been no gain at all for the general economy. So, I don't understand where these people are coming from, because if you just step back a few years, what they're talking about now would just be considered absolute monetary heresy.
And for the laws don't apply to politicians and the Federal Reserve. I mean, we got Hillary Clinton that hasn't filed taxes for the past 5 years. Then all of a sudden, she did her taxes and no fine. She didn't get go to jail or anything. But if I did that, the IRS would be on my back and I'd be in jail, because if I don't file my taxes, the IRS would be at my door right now.
Well, I think that's excuse me, another very important issue that many people are not aware of with respect to these central banks is that they are literally above the law. These central banks were created above our governments. And the bankers confirm this themselves, but they do it in code. If you listen to these central bankers talk about their institutions, they always talk about how these central banks are, quote unquote, independent. Well, the point is, with these independent central banks in our economies, there's only one economy. So if we've got our government and central bank operating in the same economy, and the central bank is independent, well, that makes our government dependent. You cannot have two independent entities within the same whole. You can't be independent of each other. In other words, if one is independent, the other must be dependent. So when the Federal Reserve and the other central banks say that they are, quote unquote, independent, they are explicitly saying that they are above the law, above our governments. And of course, we see this every day. The government makes requests of the Federal Reserve, and it just says, no, we won't do that.
Yeah, and the Federal Reserve can make any rule they want. They could come out tomorrow and say that gold is money, and then we could see the price of gold shoot up a couple $100. Or they could come out tomorrow and raise interest rate to 20% and completely crash the economy. They're also powerful, as well as above the law.
Well, that's the whole point. Is giving these institutions this incredible amount of power, and then no checks to this power whatsoever, because they are literally above the law. It's absolute insanity. And so, of course, it should not really be a big surprise to see these institutions descend into open crime the way they have. If you're above the law, you can do whatever you want, and you serve the wealthy banking cartel. Why get bound by silly little things like legality?
And in your article, you had an interesting quote from an economist saying that as the past couple of decades, we've been averaging a recession every 9 years. Now, it's been 6.5 years since the last recession, although I still think we're still in a recession, and there hasn't been any recovery in the economy if you look between the numbers and the information that's been presented by the mainstream media and the government. So using that trend, it seems like we're on our way to another economic financial crisis within the next few years.
Well, Mo, I didn't exactly cite that economist with as a reference source, but rather I was questioning the source, because this is more revisionism, because in fact go back a decade, and the average length of a growth cycle was approximately 3.5 years. Well, if the average growth cycle is only 3.5 years, what comes after that? I mean, you're either growing or you're shrinking. If the growth cycle goes 3.5 years, after that you're having a recession. It may not be the monumental crash events that seem to get the only thing that gets the bankers' attention these days. But the fact is we, back when the economy was sane and legal and we were operating in the real world, growth cycles would go about 3.5, 4 years. Then there would be minor contraction, and then the growth would resume again. The problem is that you have these totally manipulated, controlled economies now, where we have these bubble and crash cycles being constructed by the banking cartel, and for their convenience, they're doing it about every 8 years, because that's sorry, Mo, that coincides with the U.S. presidential cycle. And so this allows them to play the old Tweedledee Tweedledum game, where the outgoing regime is fingered as the supposed scapegoat for the crash. The incoming regime is hailed as the new white knight that's going to fix everything. But of course, both parties are completely owned by the same banking cartel, and I mean it's common knowledge. The media talks about it all the time. The big banks own both parties, and so they play the silly Tweedledum Tweedledee game in Washington, and the American voters continue to fall for this ridiculous sham.
Yeah, it's funny that people think there's a difference between Republican and Democrat. There might be a small difference in their belief in certain areas, but overall, when it comes to the economy and spending, they're pretty much the same.
Well, sorry, I was just going to say, and this is nothing new. If you read a book that I was very impressed with myself, it's written by Charles Lindbergh Sr., written more than 90 years ago. He stated that at that time, there was no difference between the two parties. At that time, more than 90 years ago, they were already both owned by the banking cartel. So this two-party dictatorship the U.S. has had has been going on for about a century.
Yeah, the two-headed monster.
Yeah.
So I want to shift gears here and talk about the gold and silver market. So recently, there's been articles in the internet regarding J.P. Morgan accumulating massive amount of silver lately. Why do you think that is? Do you think they're trying to buy all the silver to cover their short position, or do you think they're bullish on silver, maybe?
Well, again, I question what's been reported in the news, because I don't see there's any possible way that J.P. Morgan could have acquired this massive hoard of silver. Excuse me. Simply look at the facts here. What we're supposed to believe is that it currently is sitting on this mountain of silver that's roughly twice as big as the hoard of silver that the Hunt brothers accumulated when they were known to have attempted to corner the silver market 30-something years ago. And the point is when the Hunt brothers acquired their hoard of silver, half as much silver as what J.P. Morgan supposedly has, it caused the price to spike by a factor of 10. And back then, the global silver supply was much greater. I mean, to be very conservative, let's say there was twice as much silver around when the Hunt brothers were accumulating their silver. They acquired half as much silver as what J.P. Morgan supposedly has right now, but the price went up a factor of 10. So what we're supposed to believe today, with half as much silver in the world, J.P. Morgan can accumulate a hoard twice as big, and the price goes down, not up. I mean, this is ridiculous, Mo. Let's put this in reverse. Suppose J.P. Morgan dumped 300 million ounces of silver onto the market. Do you not think the price would go down? I mean, you know, the markets go in both directions. You can't have this insanity where if bullion is dumped, the price plummets straight down, but yet when we're told that some bank has accumulated this massive hoard of silver, larger than anything known in the modern era, and the price still goes down. That makes no sense whatsoever. So, you know, this is what I've said to anybody who claims J.P. Morgan has this silver hoard. Where's the price increase?
Yeah, and
where did the silver come from? Where could they have found all this silver, with silver being so tight? You know, the Hunt brothers had to use intermediaries and cloak and dagger to accumulate their hoard of silver. And even then, of course, as soon as people began to become aware of it, the price shot straight up. You know, even if we're supposed to believe that we just became aware of this hoard of silver just a few weeks ago, where's the price increase? Why didn't the price go straight up the day after this report came out that J.P. Morgan is quote-unquote cornering the silver market? It makes no sense whatsoever. So we're talking fantasy silver. And I mean, I look at this event not unlike what happened a couple years ago in the gold market, when there was this massive flight out of the paper gold market. And next thing you know, you have all of these commentators suggesting, quote unquote, the bankers have gone net long on the gold market. And when I heard this in 2013, I just laughed, because that's not what the bankers were doing at all. They were soaking up units in their paper called gold bullion ETFs because those funds were crashing. They were going to go bankrupt because there was a run on those funds and investors were fleeing them. So the bankers had to soak up millions of quote-unquote ounces of these bullion ETFs to prevent them from crashing, and that briefly caused them to be technically long, but we're just talking paper bullion. I mean, there was no gold involved here. They didn't buy a single ounce of gold. They just were buying their own fraudulent units of bullion ETFs. So, I mean, this is the whole thing. It's, you know, people can say things, but just because somebody says something doesn't mean it happens. You know, things have to have rationality. You know, you can't accumulate a massive hoard of silver in an extremely tight market and have the price go down. That can't happen.
Yeah, this was reported about a month ago, and they reported that they accumulated 350 million ounces of silver, and yet, if you look at today's prices, silver is below $16 as of June 8th. And there's only, based on my research, there's only a handful of silver miners that can make money at today's prices. So the supply has shrunk, and yet they claim they accumulated this much of silver, and based on supply and demand, I mean, the price should have shot up, and it hasn't. So something's going on here, obviously.
Yeah, it makes no sense at all. And speaking of the miners, you know, this is another aspect of the silver market which is just totally surreal. If you look at basically every other metal on the planet, with the exception of quote-unquote rare earths, they're all produced through primarily what they call primary mining. And what that means is the majority of the metal is produced through mines that primarily mine that metal. So most of the world's gold is produced from gold mines. Most of the world's nickel is produced from nickel mines. Most of the world's copper is produced from copper mines. The only metal out of the entire spectrum of metals, apart from the rare earths, but this is not true, is silver. Well, but of course, this is only true over the last 40 years. For the rest of the 4,000 years we've been mining these metals, most of the world's silver has always come from silver mines. So why is this not the case any longer? Well, it's obviously because silver has been underpriced to such a ridiculous degree that, as you just pointed out, only a handful of companies in the world can manage to mine silver and turn a profit because there's only a limited amount of ore bodies where the ore is rich enough to be able to turn a profit at such a ridiculously depressed price. So the fact that we don't have most of the world's silver produced from primary silver mining is another absolute form of proof that silver's price has been manipulated, because if the price was not manipulated, we would have a higher price. We would have most of the world's silver produced by primary silver mining, like it's always been done for the last 4,000 years. And, of course, the price would be whatever equilibrium level was necessary to sustain primary silver mining. But now we have this fantasy world where the bankers just crash the price of silver to some ridiculous level that's nowhere near market equilibrium. And, of course, we have no more primary silver mining industry.
And with the sideways action that we've been having in the gold and silver market for the past few years, and yet the fundamentals in this market are still strong, and we're seeing a lot of gold and silver mining put their mines offline or go out of business altogether, which shows you, it gives you evidence that something is going on in the gold and silver market, and that perhaps it is manipulated, as you said.
Well, in fact, roughly 2 years ago, I was reading this article from the mainstream media talking about how $1,300 an ounce is not a sustainable price, quote unquote, for gold. And of course, that occurred with the price of gold up close to $1,400 an ounce. Well, no hard commodity can exist below its production costs, because of course the world will run out of it. The example I always use in my own writing is chocolate bars. Let's suppose tomorrow that the bankers decided to manipulate the chocolate bar market, and they depressed the price of chocolate bars to 10 cents a piece, the same price they used to be when I was a kid. But the point is, if they depressed the price of chocolate bars to 10 cents a piece today, within a matter of weeks, all the store shelves would be totally cleaned out, because there would be this massive run on chocolate bars, because everybody would be flocking to soak up this incredibly cheap good. And at the same time, none of the world's chocolate bar manufacturers could stay in business at 10 cents a bar, and so the supply would run out. So, this is exactly what we're seeing in bullion markets. We're seeing that the suppliers go out of business. We're seeing inventories crash. I've of course published numerous commentaries showing the absolute collapse of global silver stockpiles and inventories. And we have proof, of course, that silver is below any sane price because there's no primary silver mining. So, we have all of these absolute indicators that show conclusively that these commodities are manipulated to an extreme degree. And then we have these, clown agencies like the CFTC claiming to have studied the silver market for 5 years and been unable to see any evidence at all of manipulation. Well, you couldn't look at that market for 5 minutes and fail to see the manipulation.
Yeah, I agree. So I want to ask you, I'm sure you interact with a lot of gold and silver investors. What is the sentiment out there for gold and silver based on your interaction? Are people getting tired of the sideways action that's been happening for the past few years?
Well, not the people that I deal with, because I was pretty clear back in 2011 when, actually more towards the end of 2011, early 2012, when it became clear that the market was no longer responding to fundamentals at all. And I published a commentary somewhere around the beginning of 2012 titled My Last Gold and Silver Forecast, because I simply wrote that there's no point in even pretending to analyze these markets, because we don't have markets anymore. We just have a crime scene. We just have a banking cartel that has an absolute chokehold over these commodities. We have no regulation. And I've also explained in other commentaries the means by which this banking cartel can manipulate markets. It's now all done through the computerized trading algorithms. And, there's been since I originally hypothesized this a few years ago, there's now been a lot of evidence coming out about this. There was a lawsuit against the Chicago Mercantile Exchange alleging that half of all the trades taking place at the CME are phony and illegal wash trades. And for your listeners that don't know what a wash trade is, a wash trade is where you have the same buyer and seller on both ends of a trade. It's open fraud, and we have this lawsuit alleging that half of all the trades at the Chicago Mercantile Exchange are illegal wash trades. That works out to 100 phony and illegal trades per second. And of course, no human crime syndicate can operate crime at that level. It has to be computerized. And then a few weeks ago in Zero Hedge, there was another article out in Zero Hedge about the first detailed study on the manipulative potential of so-called HFT trading. And they not only found numerous ways in which these trading algorithms can and do manipulate markets, but they found evidence that this manipulation was correlated. In other words, there was a single crime syndicate in conducting all of the manipulation. So, I originally came up with this hypothesis because it was the only explanation for the way our markets move. Markets cannot move the way our markets move every day, up and down like yo-yos in this ridiculous synchronicity. That cannot happen in legitimate markets. The only way they can move that way is if they are totally controlled by some extraneous means. And so I suggested the only possible way that could happen would be through computerized trading algorithm manipulation. And in fact, that's what we're now seeing as the evidence emerges.
So with the high-frequency trading, we have the same buyer and the same seller doing the exact same trade. Is that what you're saying?
Yeah, you see, the thing here is it's strictly the volume. If you can bombard markets with these incredibly massive volumes of trades, you can pull and push markets in whatever direction you want, because the sheer quantity of trades going up or down on whatever given day will drag traders up and down with them. And I mean, I can say this personally, just from my own experience as a trader and watching one particular type of trading algorithm manipulation. There's one program out there, and it's designed to automatically kick out a new trade 1 cent below the current offer on whatever is being manipulated. And I don't know if you do your own trading and work off of a platform, but of course, when you watch trading in real time and you see a new trade come out, the trade's either higher or lower. Well, of course, if you have this trading algorithm programmed to kick out a lower trade every time the stock moves higher, 1 second later it kicks out a lower trade, the traders who are following whatever is being traded, they don't even get a chance to see the green arrow indicating that something's moving higher, because immediately this algorithm kicks out a lower price a second later. And so the optics that are created for people that are watching whatever particular market's being manipulated is that the price is always falling, even if it's actually going up. So for instance, you could bid up a price 10 cents on a particular stock, for instance, but this algorithm then kicks out another bid a penny lower. So the actual price has gone up, 9 cents on balance, but of course what the traders are actually seeing who are watching the platform is nothing but red arrow, red ink. The price, it looks like it's falling all the time, even if it's actually going higher. So there's psychological factors for people that are trading live, but then of course the other issue is that we've been brainwashed into believing that everybody needs these so-called HFT algorithms, and so people are patching themselves into them, and it's like the Pied Piper. You have these massive volumes of HFT trading roping all of the other algorithms up and down with them. So, there could be 20 or 30 different programs, but whatever master program is operating with all the volume is going to push and pull them all up and down with them. So, there's no thinking, of course, in this algorithm trading, and so the potential for manipulation is infinite.
And there's been a big debate regarding high-frequency trading and whether it's manipulating the market and currencies or whether it's good for the market. Even Michael Lewis wrote a book on high-frequency trading, if people want to check that out. I think it's called Flash Boys or something like that.
But that's disinformation, Mo, because he was distracting people from the actual issue. He was trying to tell us that the issue here was speed. Speed has nothing to do with it. It's volume. It's the quantity of trades. It doesn't matter at all if somebody is a microsecond quicker than somebody else. That's going to allow you to be slightly more profitable on your trading. Big deal. That's not what manipulates markets up and down like yo-yos every day. What's manipulating the markets up and down like yo-yos every day are massive quantities of phony trading. And this is the issue. And this all, and even the name HFT trading, high frequency trading, it's all distraction to get us focused on speed when that was never an important aspect. Never at all. It's always been about manipulation, and speed has just been a byproduct.
Jeff, one last question before I let you go. Recently, the G7 has voted the Chinese yuan into the SDR, the special drawing right that the IMF has, which is a basket of world reserve currencies that include the dollar, the sterling, and the euro, and other currencies. So one of the requirements for that is China have to let them inspect their vault and see how much gold they have in reserve. Now, do you believe China gold reserve will be the catalyst that will cause gold to go higher once they release the numbers?
Well, I think we have to qualify what's exactly being required here. What I think is being required of China is they're being required to verify their reported reserves. They're not being required to disclose anything that hasn't already been disclosed. And here people have to understand that there are two different ways in which any nation can accumulate gold. They can accumulate it on the open market internationally, or they can accumulate it domestically, for instance, from their own mining industry. If a nation accumulates gold on the open market internationally, it is required to report all such purchases in a timely manner. It's governed by the same rules that govern international currency transactions because, of course, the bankers have always treated gold as a currency no matter what they say. So this is what happens when you acquire gold on the open market. When you acquire gold domestically, for instance, from your domestic mining industry, none of that gold needs to be reported. In the same manner that if you acquire domestic currency and add it to your holdings, you don't have to declare that. You only have to report holdings in foreign currencies. So China could have accumulated, by my count, at least 4,000 tons of gold. I have read another article saying somebody claiming 10,000 tons. But the point is, it only is required to disclose gold that it's acquired on the open market. So, the IMF can go into China's vault, its official gold vault, and look around, and all it's going to see is the gold that is required to be reported. It doesn't mean we're going to find out China's true reserves, because that's not what's being required here.
And I think everybody thinks that they're going to underreport their numbers.
Well, we know China's underreporting because we know China is accumulating basically every ounce of gold that's produced from its domestic mining industry. None of that gold ever leaves the country. Plus, China imports another 1,000 tons a year. So, we know the government is soaking up all of the gold from China's domestic mining industry precisely because it does not have to report it, and it's a surreptitious way for a government to accumulate gold. Russia's government does the same, but it also buys gold on the open market because Russia has a massive appetite for gold that can't be satisfied by its domestic mining industry alone. So, we know China has much more gold than it claims to have. The question is, when will China believe it's in its own interests to declare this gold? And it's not required to do so. This is a totally voluntary issue. And it's a strategic issue.
And yes, and there's been rumors that they've been buying the annual mining supply of gold for the past few years. So
for the past decade.
Past decade. Oh, wow. Well, we'll see what happens. Well, Jeff, thank you for coming on for a podcast. And if people want to find out more about your work, where can they go?
My site is bullionbullscanada.com, BULLION, Bulls Canada, and that's where I've been located for the last 6.5 years. I've also been doing a publishing agreement with SprottMoney.com, so a lot of my work is seen over there as well. And then, I get distributed to other sites like Zero Hedge, SGT Report, and a lot of the other fine alternative media sites.
Okay, great. Well, Jeff, thank you for coming on.
Thanks a lot, Mo. Always a pleasure.